Greetings from Kotak Mutual Fund. Many of you might be wondering what's happening in equity market. Since August 21, Nifty is almost at the same level. Equity mutual funds returns are also reflecting that trend. With all the noise coming from global markets, it's no wonder that people are confused about what's happening in equity markets. Any market to run, three factors are necessary: money, sentiment, and fundamentals. In the short term, markets are like voting machine. The flow matters. In the long term, markets are like weighing machine. Fundamentals matter. Let's look at sentiment. Sentiments are impacted by events, and all kinds of events keep on happening. Some improve sentiment, some adversely affects it. Who would have thought that 16th largest US bank will fold like a pack of cards? Russia-Ukraine situation, if it de-escalates, will have positive impact on sentiment. If not, it will have adverse impact. How much Fed rate will be raised? When will Fed start cutting rates? That will have impact on sentiment. It will be fair to say that many events will continue to happen and they will all continue to impact sentiment. From a flow point of view, foreign portfolio investors have been regular sellers in Indian equity market. They are finding Indian equity expensive vis-a-vis peers. They are having profits in Indian equity market, and they are getting an exit. Put together, FPIs have been sellers. Domestic institutional investors led by mutual fund have been counterbalancing FPIs, and hence their selling has limited impact on index. In most parts of the world, entry into a market is easy. Paisa feko, tamasha dekho type. Exit is difficult. Very recently, Dr. Mobius, an emerging market guru, mentioned that despite selling his shares in China, he was not able to take money out. In India's case, exit is easy. Between October 21 and May 22, FPI sold close to $32 billion of equity. We gave them exit not only from the equity market, but also from India by allowing them to take their money. My feeling is that once our valuation comes in equilibrium with our peers, FPIs will come to buy India. They may find India expensive in the short-term horizon, but they will come back to participate in long-term India growth story. Domestic investors' flows in market continues. SIP is averaging around 13,500 to 14,000 crore a month. Whenever markets are down, lump sum flows come in. Put together, from a sentiment and from a flow point of view, market looks supported. It is the fundamental which makes all the difference to the market over a long period of time. Our economy continues to be in good shape. 6 out of top 10 fastest growing cities of the world were in India in CY22. The same trend is likely to continue going forward. China and India are the only two economies which has grown relative to US over last 2 decades. No other country has been able to achieve that kind of growth in our peer group. India is one major economy which has improved its debt to GDP ratio from subprime crisis in 2008 to COVID crisis in 2022. No other country has been able to achieve that. With little bit of price and time correction, Indian equity is today trading at reasonable premium to its global peers. There might be a need for some adjustment, but certainly based on our historical valuation, now Indian equity markets are in fair value. Corporate earnings were little below expectations in September 22 and December 22 quarter, but Jan-Feb March number seems to be moving in right direction. Trade deficit, which was a worry till December 22, has come under reasonable control in Jan as well as Feb. Rural consumption, which was witnessing negative volume growth for last 5 quarters till December 22, seems to be recovering based on monthly data available. While there is concern on monsoon getting adversely impacted by El Nino, we will get the confirmation about the severity around 15th of April. Net, put all these things together, India continues to remain a long-term growth story. It might look expensive in the short term to outsiders, but over a longer period of time, there will be no comparison to India growth story. What should we do as an investor? Well, this is fair value market, but there are so many events happening from Russia, Ukraine to oil price to US Fed pivot to general election in 24 to corporate results that markets are likely to witness both side movements. As markets correct and valuation becomes more attractive, keep on buying into the correction. Between large, mid and small, there is equilibrium valuation, hence no aggressive call in terms of overweight or underweight. Common sense suggests that small and mid cap tend to fall more than large cap, and hence it might be appropriate to be marginally overweight large cap and marginally underweight small and mid cap. Use correction as an opportunity to buy. From a sectoral point of view, banking and financial services sector has witnessed heavy FPI selling, but now their holdings have come down to historically low levels. Banking sector performance continues to be good, valuations are reasonable, NPS are at decadal low level, margins have expanded and are stabilizing. Put together, it could be one sector to buy on correction. Ahead of election, government puts money in the pockets of consumers. Most of this money go to bottom of pyramid. Their spending propensity is far higher than saving propensity. Consumer staple and durable targeted at the bottom end of the pyramid will benefit from this money transfer. China plus one is expanding. 14% of companies migrating out of China are setting up shop in India. Thanks to China plus one, global buyers are diversifying their supply base, and many of them are open to do business in India. This is expanding India's manufacturing base, and we believe manufacturing theme should do well over the years. Between banking and financial services, bottom end consumer staple as well as durable, and manufacturing, we think one will have market outperformance. What should you as an investor be careful about? Please ensure that you remain invested in the market despite returns since August 21 not looking encouraging. Market is like a test match. More you stay on the pitch, opportunity to make money will increase. Please continue your systematic investment plan, and on correction, think about topping it up. From here till May 24, many events will continue to impact market both ways, up as well as down. Use correction as an opportunity to invest into the market and participate in India's long-term growth story. Our fundamentals remain strong and is becoming attractive every day. Domestic investor sentiment remains robust towards India. Foreigners will probably follow through. Put together, there will be Triveni Sangam of positive sentiments, solid fundamentals, and strong flows to propel Indian market to higher level. Keep participating in India growth story. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.